Welcome to our deep dive on the Russell 2000, where we're going hunting for the market's hidden gems.
All right, let's just jump right into it. Are you tired of picking up crumbs from the tables of the S&P 500 giants while the real money is being made somewhere else? I mean, think about it. The next Amazon, the next NVIDIA. It isn't in the top 10 yet. It's out there, hiding in the Russell 2000.
Okay, so what is this hidden world of investment? And more importantly, how do you even get there? Well, today we're going to pull back the curtain on the Russell 2000 and really see what makes it tick, and why some people call it the true heartbeat of the American economy. Okay, first things first. To really get what the Russell 2000 is all about, you've got to understand that we're talking about a completely different league of companies here. These are not the names you see dominating the headlines every single day. So the building blocks of this entire index are what we call small-cap stocks. Now, cap is just short for market capitalization, which, is basically the total value of a company. These aren't tiny little startups in a garage, but they're not corporate giants either. Think of them as the agile, super hungry businesses that are just laser-focused on one thing: growth.
And this really frames the whole market perfectly. It's kind of like a boxing match, right? In one corner, you've got the S&P 500, the heavyweight champs, the established giants. But in the other corner, you have the Russell 2000. These are the scrappy, high-growth challengers, all fighting to become the next household name.
And here is the absolute key difference. The S&P 500, it's dominated by these massive, multinational corporations, companies that operate all over the world. But the Russell 2000, it's made up of 2,000 smaller companies operating, for the most part, right here in the US. And that is why people call it the heartbeat of Main Street, not just Wall Street. So this focus on smaller, homegrown companies, well, it leads us to the most exciting part of this whole story: the hunt for absolutely explosive growth. I mean, just think about it this way. It's way, way easier for a $2 billion company to double in size than it is for a $2 trillion behemoth, right? So when you're investing here, you're essentially getting in on the ground floor, where that kind of mind-blowing growth is actually still possible. And that potential, it really, really shines when the economy is booming. These smaller, more nimble companies, they can pivot, they can adapt, they can scale so much faster than some bureaucratic giant. And that can lead to some seriously outsized returns when the economy is just firing on all cylinders. Okay, but let's pump the brakes for a second and be crystal clear. With that chance for higher rewards comes much higher risk. This is not some sleepy, conservative investment. You absolutely need to understand the stakes before you even think about jumping in. So there are two big risks you've got to wrap your head around. First up, volatility. Man, the prices of these small-cap stocks can swing way more dramatically than the big guys. We're talking about a serious roller coaster right here. The ups are higher, but the downs can be a lot sharper too. And the second huge risk, it's their sensitivity to interest rates. A lot of that volatility we just talked about is actually fueled by this. See, smaller companies rely heavily on loans to grow. It's their lifeblood. So when interest rates go up and borrowing money gets more expensive, it squeezes them so much harder than some giant corporation that's just sitting on a mountain of cash. All right, so you've seen the thrilling potential and you totally get the risks. Now for the practical part. How do you actually unlock this part of the market for your own portfolio?
So how do you actually do it? I mean, picking 2,000 individual stocks, that's basically impossible for most of us, right? That's why the most popular way in is through an exchange-traded fund, an ETF. Just think of it like this. It's a single basket that holds a tiny piece of all 2,000 of those companies, and you can buy that entire basket with just one click. Now, there are a bunch of options out there, but let's look at two of the biggest players. First, you've got IWM. This one is known for its high liquidity. What does that mean? It just means there are tons of buyers and sellers all the time, so it's super easy to trade in and out of it quickly. That makes it a huge favorite for active traders. Then you've got something like VTWO. Its main claim to fame is its lower fees, which makes it a really solid choice for long-term buy-and-hold investors who are playing the long game.
And that's really the crucial point. You have to ask yourself, what kind of investor am I? Am I a frequent trader looking to jump on short-term moves? Or am I a long-term investor, slowly building wealth over years and years? Your answer to that question is what determines which tool is right for you. Because believe me, there is no one-size-fits-all solution here. So, the Russell 2000. It's this fascinating, wild hunting ground. Yeah, it's filled with risk, but it's also packed with the potential for incredible discovery. The giants of tomorrow, they're out there, right now,
quietly growing, just waiting to be noticed. And the real question is, will you find them before Wall Street does?